Elon Musk did not spend his own money to buy Twitter, so why should you when you're buying a business?
Elon Musk is in control of Twitter.
If the world's richest man isn't pulling cash out of his pocket to buy a company, what does it mean and what does it tell us? Simple. Rich people don't buy businesses the way most people think. And today I am going to break it down exactly how they do it, so you can too. By the end of this video, you will understand how Wall Street acquires things, how Elon Musk structured this deal, and how you can apply these strategies, even if you don't have $1 billion in the bank. Let's dive in. So how rich people buy businesses, and this is exactly why you have been lied to. So let's talk about one of the biggest myths out there. So the idea is that you need millions of dollars to buy a business. Most people think that owning a business means you have to pay a full price out of your own pocket. But that is not how the wealthy do it. Elon Musk is the richest man in the world, yet he didn't use his own money to buy Twitter. Why? Because rich people, they don't spend their own money to buy assets. They use leverage, debt, and other people's money, OPM. Buying businesses is not about how much cash you have. It's about knowing how to structure a deal. Let me give you a simple example. Imagine you want to buy a dry clean business that makes $500K per month, but the owners is tired and want to sell. Most people would say, I don't have the $500,000, so I can't buy it. But a smart investor would structure the deal differently. They would get a loan from the bank to cover part of it. They would ask the owner to sell their finance, meaning he get paid over time instead of upfront. Or use the business' own revenue to pay down the debt or to pay for the deals, not your personal money. So this is exactly how the rich thinks. They don't ask, can I afford it? They ask, how can this business afford it? And that's exactly what Musk did with Twitter. So how Elon Musk bought Twitter without his own money? Now let's break down how Elon Musk actually structured the deals. This wasn't a case of Musk pulling out his checkbooks and wiring $44 billion from his saving account. No, he used a thing called leverage buyout, aka LBO. So what is LBO? And LBO is when someone buy a company using mostly borrowed money and the business itself pay for the acquisition over time. This is how private equity firm, hedge fund, and billionaires buy businesses without using their own cash. That's also what I did. How did Elon Musk structure his Twitter buyout? So the Twitter total cost is $44 billion. Out of the $44 billion, there's $13 billion in the bank loan from banks like Morgan Stanley, Bank of America, etc. There are $33 billion from selling Tesla stock and private investor. But hey, he didn't actually sell the Tesla stock. He used the Tesla stock or share as a collateral to borrow even more money to pay for it. Again, not his own money. The key Wall Street style move here is number one, Twitter took the debt, not Elon Musk. Number two, the business revenue pay off the loan, just like rental income pay off a mortgage. I'll give you a simple example. Imagine you want to buy a car wash business that makes $50,000 per month and it's valued at $1 million. Do you pay $1 million cash upfront? No. You take out a loan, negotiate a seller finance, and let the business profit pay off the debt over time. Now you own a $1 million asset, but you didn't have to come up with any money of your own. This is exactly what Elon Musk and myself did with business acquisition, except instead of car wash revenue, he used Twitter's ad revenue to pay off the acquisition loan. And this is how smart buyers think. Segment number 3, Twitter's poison pills and how Elon Musk crashed it. Now let's talk about one of the biggest roadblocks that Elon Musk faced, the poison pill. So what is a poison pill? A poison pill is a corporate defense strategy to prevent hostile takeover. So Twitter's board did not want Elon Musk to take over. They actually don't really like Elon Musk. So they tried to block him by letting existing shareholder buy new share at a discount if anyone like Elon Musk brought more than 50% of the business. So this would dilute Elon Musk's share and make it way more expensive for him to buy the control. So how did Elon Musk beat it? Instead of negotiating with Twitter board, he went straight to the shareholders. He offered them a cash buyout at $54.20 per share, a price that is too good to refuse. So this actually forced Twitter board into a corner. If they reject the offer, the shareholder would rebel. They would be like, hey, are you actually acting as our best interest? So the board had to accept the offer. Now let me give you a simple example. Imagine you want to buy a failing convenience store, but the landlord doesn't want to sell the building. Instead of negotiate with the landlord, you should go to the supplier and offer to pay them directly. The landlord starts losing his ability to control pricing and suddenly has no choice but to sell to you. This is exactly what Elon Musk did. He bypassed the resistance and forced the deal to go through. Segment number 4, the fastest way to wealth, buying versus building. So here's the final takeaway. If you want to own a business, should you just start from scratch or buy an existing one? Starting from scratch is slow. It takes time, risk, trial and error, and the fact is 90% of the business that just getting started up, they don't survive after a year and mostly after 3 years. Buying an existing business is fast. The revenue, customer, system already there. This is why Elon Musk didn't start a new social media platform. He had just bought one that already had 200 million users. This is what wealthy people do. They don't start from zero, they just acquire. So if this was eye-opening to you and you want to invest alongside with me instead of just learning from scratch, just like not starting a business from scratch, apply at investwithbenjamin.com. Before you go, like, subscribe, and turn on a notification so you don't miss the next breakdown. See you in the next videos.